What is up, A-Team? Welcome back. Awesome here. Hope everyone's having an awesome day. Or not, depending on what, but hope it's awesome. And yes, we're back at it today to talk more about crypto, talk more about the Fed's decision. As you guys know, the Fed's decision coming in here pretty quickly. That's why I jump in on kind of early here to the 11 marker, just because I want to be able to see the Fed's decision coming in here live on stream. So before everything jumps in here, the Fed's decision is a big day. You can see the markets are actually doing, they're kind of, I mean, for the most part, they're doing good. If you're on the stock market, the cryptocurrency side's actually looking pretty decent too. So a lot is hedging on this. The only stock out there that's actually taken a major tank is Alphabet. Obviously, they're sinking well over 8-9% after they come out and they talk about the AI stuff. So yeah, kind of crazy there. But before we jump into everything, I do want to say what's up to everyone here in the house. Here we got Big Watch Dude. What's up, man? We got Ripperino, Pipeline, Overcoming Demons. What's up, man? Ian, Tim Shea. We got Tim Shea. We got Mayor Crypto in the house here. What's up, man? We got Craig Beats in the house. What's up? Stop sign. Yarvis, what's up, dude? Petra. Yeah, we're killing it. What's up, RPM Abel? What's going on, guys? Brodick. Yeah, we're jumping in early here today. Let me share the screen here. We've got a lot of things to actually cover today in regards to the Fed's decision. I mean, this is probably one of the bigger Fed's meetings I've been involved in quite some time, just because I think there's a lot hedging on this. I will say this, that the chances of them actually reducing rates is pretty small. This one right now seems to be like we're not going to move anywhere from the rates, but there is a lot of data out there showing why we should actually reduce rates. And, I think there's actually a lot pending on this. Whether they do it or not, I don't know. I think it would be a shock to a lot of people if they did reduce the rates. A lot of us want it, and you can actually come out here and see. I mean, there's a lot of data out here in terms of interest payments, the U.S. interest, all this kind of stuff showing that, we actually need to take control of the debt, right? And to be able to take control of the debt, you got to reduce the interest rates. And another big example here too is the delinquency on mortgage-backed securities. So you got to think there's a lot of the mortgages out there that are hedging off of the interest rate. People trying to refinance, things like that. And so this is something that's really big. This is a really, really big day today, but I don't think they're going to reduce it. It says 1 in 3 probability of a reduction at the June meeting. So, I mean, you're talking a 33% reduction at the June meeting. So they're not even saying that there's going to be a rate reduction today. I don't know how the markets are going to react, to be honest with you. I really don't know how the markets are going to react to this. But, I mean, we should have some updates coming here pretty quickly with the rate cuts here. I think a lot of people are waiting to sort of see where the Feds go, where the direction of where they go. And I think that another big thing here, too, is I think people are actually waiting to sort of see what Jerome Powell has to say. And there is breaking news right now in regards to, how the Feds are going to pursue this. I mean, some people are saying there's going to be rate cuts. I want to hear what you guys have to say about this. And right now it's showing that the rate cuts are unchanged. So that's kind of what we predicted here. You can see right here that rate cuts are unchanged right here. Breaking news, Feds leave rates unchanged, which is on Bloomberg TV right here. They're talking about this. So we'll see how the markets react right now. We'll probably get a nice little update right here. Feds leave rates unchanged as expected. So that's kind of what we were expecting, to be honest with you, with a lot of what we were doing. I mean, I was kind of hoping for there to be rate cuts. I think it was going to be beneficial for a lot of us to get the rate cuts here. But again, it is what it is, right? It says Fed holds steady as it notes rising uncertainty and stagflation risk. So that's kind of the downturn to it. It's the stagflation risks that are associated with it. So yeah, kind of crazy when you think about it, but here we are. Cut the rate. Yeah, they definitely didn't cut the rates. I was hoping they would cut the rates, but they didn't cut the rates. So looks like they're leaving them change, but this should actually be okay for the markets. We'll actually kind of see what the markets are doing. Let me get let's get what Bitcoin's doing up here on the my computer's lagging a little bit. So sorry if I'm lagging. Let me know if I'm lagging. For some reason the internet's not doing too good today. So you can see that we're actually not doing too bad. Let's look in the last hour here. The hour chart's coming up. We are in the hour chart right now. It looks like it's in the green within the first minute of this hour. Over the last couple hours, we've been in the red here on a decline on the hour chart. We actually might show some positivity here. The NASDAQ was down 4,700 or 47 points. The S&P 500 was pretty flat at 8 points. And the Dow, was up around 350 to start the day, now down to 246, but still up on the day right now. So this will be very interesting to sort of see what Jerome Powell says today. If he goes out and speaks, we can actually probably tune in and sort of hear what the experts are saying in regards to what they feel about this. Austin, we can't hear you. You can't hear me? Are you for real? Oh man, I've this whole time been speaking. We can't even. You guys can't even hear me. Are you messing with me? Oh, you guys can hear me. You guys can hear me. I can hear him fine. Okay, I was like, damn, dude. Damn, Marty coming in hot. Billian Wright, what's up, dude? Thanks so much for the $2 super chat. Out here cleaning pools in the rain. Dang, dude, the rain. It's still raining where you're at. Okay, cool. I can hear you. Cool. I'm glad you guys all can hear me. I was like, I had to go look at my audio settings real quick to just make sure you guys could all hear me. So, yeah, there's going to be some interesting takes on this. I think some people are kind of waiting to sort of see what happens. You can see the Nasdaq is kind of going up and down right now. It's not really reacting too much to it. Bitcoin, obviously, it's actually rising right now in terms of Bitcoin pricing. You can see over the last hour, just this hour alone, we started the hour at 96,181. We're at 96,537. So, we're starting to sort of see this come back up here. Yeah, maybe this will be positive for the markets. We'll have to sort of wait and see. Overall, the markets have been down. Let's go to the hour chart here. Yeah, you can see over the last hour percentages pretty flat for the most part. A lot of uncertainty out there, but overall, the last 24 hours are up 1.74%. So that could be good when looking at that. So let's see, Mary Crypto. Yeah, what's up, dude? And it's higher. Yeah, we'll see what happens. Sorry, Austin, I had my volume off. You're good, bro. I was like stressing for a minute there. Good afternoon, everyone. What's up? What's up, Rock Creations? All right, perfect. I'm glad you guys can hear me. So yeah, the markets are reacting. I mean, the S&P 500 is going down just a little bit here. The Nasdaq continues to fall. A lot of that has to do with Google. As you guys know, Google has sunk massively. You can see right here. Right here, Alphabet extends losses to over 9% on the day as Apple explores AI search in its browser. Not a single 10-minute candlestick in the last 2 hours. That's pretty brutal for Google right now, for Alphabet. And a lot of it has to do with their regards to the AI. It says Apple Q says AI will replace search engines. So, I mean, you got to think that's going to be a battle. But the thing with Google is Google holds so much power, dude. They got YouTube. They got so many other platforms. It's insane. So I wouldn't even sweat. I wouldn't even sweat this, to be honest with you. Trump just said he's not going to back down from his 140%. So what? That won't help. Yeah, and that sort of news came out today as well with the you could see there was a lot of news out there in regards to discussions being had this weekend, right? So you had Secretary Bassett come out and say that they were going to be having discussions with China on Saturday, so tomorrow, over the trade. And he did come out and say under oath that right now where they're at with trade is not unsustainable for both countries. So that is positive to hear. At least someone's recognizing that it's unsustainable for both countries to do that to each other. So hopefully comes to some agreement. We'll have to sort of see what happens. What are you thinking about Trump's big announcement? I know it's speculation. Yeah, I don't know what his big announcement is, dude. He's such a wild card. I have no idea what it's going to be. To be honest with you, I don't know. I'm kind of intrigued to sort of see what it is. I think we're all it's the AI takeover. Yeah, dude, the AI is insane. I will admit, dude, AI is the next thing. I finally, for my first time, dude, I drove a Tesla. I test drove a Tesla just to see what it was like, and never really test drove them before, nothing like that. And dude, the self-driving capabilities of a Tesla is insane, dude. And so the AI takeover is a real deal. And if you don't believe me, just go hop in a Tesla and let it drive you down the road. Let it drive you down the road, and you'll have a whole different perspective on where AI is at. You're putting your hands you're putting your life in the hands of AI, and it's like it works out pretty good. Austin, are you just going to stream Powell's FUD? Yes, I'm going to stream his FUD. He should come out and speak here. I don't know exactly when he's going to speak here, but we'll have to sort of see where it goes. But I mean, overall, the markets are kind of they're kind of sputtering right now. You can see that we're in a little bit of decline. Where Bitcoin is actually falling right now. It was at 965. Now it's at 9316. So, you can see that there's definitely a little bit of a downturn from the decision. Yep, you can see the S&P 500 has now dipped into the red. The Dow has lost over almost 200 points now. So it looks like we're not looking too hot right now. I'll say that just in terms of where the markets are going. Don't think I'm allowed to let Tesla self-drive where I'm at. Really? Austin, it's a good time to buy XRP. I think it's a good time just to jump in crypto. Love his Tesla detect ghosts. Yeah, I heard that there's like phantom ghosts in their things. I've been driving a Tesla for the last 7 years. I will never drive a gas car again. Oh wow. So yeah, and that's where I was kind of blown away. You know what I mean? I was kind of blown away with the technology. Uber loses billions per year. Per year, it's a long play. Uber will eventually be all self-driving Uber owner vehicles. Yeah, that's kind of what I was thinking, F. Joe. I mean, that's kind of how I would look at it. Is I would just go buy a bunch of Teslas and just become a taxi for everyone. I mean, imagine the taxi companies. You wouldn't have to pay any workers' compensation. You wouldn't have to pay any vacation leave. No one's calling in sick. The only thing you have to keep up with is repair. The maintenance on your vehicles. Rotating tires, stuff like that. But for the most part, it's very, very easy. And that's the plan. Yeah, you're right. That is the plan. We'll see how it rolls out in Austin, Texas this year, and see how that goes, because I think that's going to be a big rollout for the taxi services. I think that they said in 2 years that the whole goal is to have self-driving, to where you could actually put your own vehicle in taxi mode. This is what the lady at the sales place for Tesla was telling me, is that in 2 years from now, that the goal is to basically have your own self-driving vehicle that will taxi yourself around. And so you'll just put your vehicle in taxi mode and it'll take you wherever you want to go. And so like you go to the bar and drink and hang out and then be a little inebriated and just get into the taxi, which is your own vehicle, and have it drive you home. Are you going to show the live Powell's decision? Yeah, I'm waiting for the Bloomsburg. I'm watching Bloomsburg over here. You can see I'm watching Bloomsburg on the side, waiting for Powell to come up. He should speak today or give a comment on their decisions. Trump announcement is he hired Godzilla to take a break from Tokyo. Use the self-driving in a cemetery, then watch the screen. You'll see the car detect spirits. Dude, I am so gonna do that with the kids in there too. Yeah, if I get a Tesla, like I said, I gotta decide first if it's something to even put money into. So we gotta decide that first. It was a granny driving, but she was asleep. Gosh dang, stock's dropping now. Yeah, the stock market's coming down pretty hot. Nasdaq's down 161. S&P 500 is down 24. But again, Nasdaq was already falling down because of Alphabet. Alphabet obviously being one of the largest tech companies out there. When you start to see an 8%, 9% sell off in your stock, obviously you're going to have it's going to take down the market. You can see right now the Bitcoin is dropping pretty heavily right now. You can see we started off here in the 9.6, and this hour started at 9.633, and now we're down to 9.5. So you can see that even Bitcoin is starting to fall off right now. The day is now in the red. You can see right here we actually ran all the way up to the top of 97,725 this morning, or as in this 24-hour range. And this is pretty crazy. We're actually having a pretty big sell-off right here. But you can see on the day chart, we have this nice little fair value gap that needs to be filled up right here. So I would expect this to probably fall down to 9.5, if not down to below 9.5 right here on the daily. Yeah, this is gonna be interesting to sort of see where this plays out. The bounce back off this is pretty damn nice right here. So we'll see if we can actually sustain this. The weekly is still up over the weekly. So even though all that's there, the weekly's still there. So that's positive to see. But yeah, the markets are not looking too hot right now across the board, which is kind of what I expected. If we stayed the same, or didn't take the rate cut, I felt the market was gonna sputter, right? But I think that even if they would have cut the rates, we probably would have saw the markets actually boom just off the news that the rate cut came in. However, we would also then probably see a sell-off from the rate cut. So 100% you'll DYI. If you're going to taxi yourself your own car, there has to be a sober person there. Don't even dream you can go to a bar and drive home with autopilot. No, I said they said in 2 years that's the goal. In 2 years, that's the goal for Teslas, is to where you could self-taxi. So obviously the federal government, the feds have to, with the highways and all that kind of stuff, and they have to probably approve something like that before it comes to fruition. But I think that's like their goal. And I was like, that'd be wild, dude. In 2 years, you can basically do that. You say that he isn't cutting. Who's not cutting, Tommy? At my work, had a poll to keep or exclude Tesla from the lease portfolio. It got excluded by over 90%. That's so dumb, dude. They're booming right now. Tesla's going to boom, bro. Bottom range of dump 91 to 88K. You think 91 to 88K? I mean, if you go back and look, I mean, I guess if you say 81K, you said 81K. Did I read that right? 88K. Gosh, I was like, gosh, dang, dude. Yeah, I mean, you can see 88K right here is at the bottom of this fair value gap right here, which is right at the averages, right? So 89 to 88. So we could come down and hit this fair value gap right here. which would not shock me. It's a pretty big fair value gap on the daily. You know, we can look at the weekly. The weekly is has a really big fair value gap down here as well. So, you know, the weekly could actually come down, and you know, we could probably have a little bit of a sell off here and come fill up half this gap right here around the 89. Like you said, probably around the 90 to 89, somewhere in this ballpark. We could probably see this fair value gap get filled up a little bit here. Since we have had 1, 2, 3, 4, almost 5 weeks of green, you know, we are probably going to fall into a week of red, which would include this week right here. So we could come down. Yeah, we could come down to into the 90s, right? 91, 90, 91. I mean, we could fall into that range. And it wouldn't be that big of a shock to me considering the markets are the way they are, right? Super volatile, no idea what's going on. Everyone's kind of just, you know, throwing darts at a board, including Jerome Powell himself. So, I mean, there's that as well. I think everyone's trying to, you know, you got Trump out here who's, you know, talking about China and talking about, you know, the if they're going to actually have, you know, pull tariffs or not. So yeah, it's very, very interesting to see where this is going to play out here. So S&P 500 is trying to get back into the green, and you can see right now that the Dow is trying to stay into the green as well. But yeah, the S&P 500 is kind of up and down right now. The big thing right here is gains as Fed flags stagflation risk. That's the big thing right there, is the stagflation risk. So it says stocks were a little changed Wednesday after the Federal Reserve left its key interest rates unchanged, citing a greater increase in uncertainty around the economic outlook. It says the committee is attentive to the risks to both sides of its dual mandate and judges that the risk of higher unemployment and higher inflation have risen. Let's see here. There are serious concerns that the tariff situation will introduce inflationary pressure that will begin to reveal themselves as time progresses. We fear inflation will remain elevated and sticky, if not specifically moving meaningfully higher, causing interest rates to remain higher until inflation is tamed. Traders also monitor the latest updates on the U.S. stock negotiations. And so that's kind of where it says the committee is attentive to the high risk to both sides of its dual mandate and judges the risk of higher unemployment. So yeah, they're kind of, that's where they're saying right now. So you know, it'll be very intriguing if Powell comes out and speaks on this. We could be saving grace if Powell announces quantitative easing. Yeah, talk about China and Alcatraz. Alcatraz is wild, bro. The Alcatraz thing is crazy. The Alcatraz thing was is he live already? Cuts incoming. Yeah, the cuts are, there's no cuts. I kept everything hope so and create a higher low on the main time frame. Yeah, I'm kind of with you, Royal Decor. What if you sell the rumor by the news event? You'll probably be upside down. So we'll see if he jumps on here. I'm still watching it on Bloomberg television. You know, hopefully he comes up and speaks. But yeah, markets are looking a little bleak right now. Well, Bitcoin's trying to come on. I mean, Bitcoin's trying to come on strong. It's hovering around this 96, dude. We'll see if it can continue. We'll see if it can continue. The hour is looking a little rough. But even the hour chart right here, we crossed back over into the green. So even the 50 is above the 100 and the 200. So that's positive to see. That's super positive to see. Standard volatility in crypto, yeah. I'm not even sweating. I'm not even sweating this. Actually, it's not as bad as I thought it was going to be. To be honest with you, I was hoping that rate cuts were going to come, and the big reason why I was hoping rate cuts were going to come was because of stuff like this right here. The delinquency rate on commercial mortgage-backed securities for offices rose to 10.3% in April, near the highest. Delinquency rates on these loans are now up 9%, point over point. By comparison, delinquency rates hit 10.7 at the peak of 2008. The multifamily delinquency rate surged 113 points in April to the highest here in 2015. So you can see right now that this is why rate cuts are so important, because people can't afford they can't afford things. So what do you got to do? You got to go in and refinance, try to bring your payments down, try to make it more affordable to live, to have your commercial, your real estate rates and stuff like that. That's my belief in it, dude. I'm gonna be honest with you. I think that's why rates are so important. To have low interest rates and things like that. So I don't know what's going to happen here, dude. I don't know what's going to happen, but all I can say is it's not looking too good from a delinquency rate. I mean, people are going to probably start losing some things here, so that's always never good. And on top of that, right here, interest payments on the U.S. debt declined by 13.5 billion in Q1. It says the interest rate expense on the national debt is still twice as high as it was 5 years ago. So you got to think, if we're going to be paying interest on our national debt, realize that it really has a lot to do with the interest rates of where they're at. So to lower our payments on the national debt, you got to lower interest rates. You got to lower them, dude. It's like that's the game. Powell is literally the undermined of the notion. Whole world looking back, yeah. Oh, whole world looking bleak. I know. I love Trump. It's hard not to think about where he might be. Yeah, I'm gonna start selling feet pics. Yeah, you should. You should, Dream Chaser, start selling some feet pics. Not sure how they could cut. Yeah, I think a lot of it has to do. I mean, I get with the inflation and stuff like that, but I mean, you gotta start putting something out there to give relief to people. Thoughts on Coinbase? I like Coinbase. Since a ton of Bitcoin is bought over the counter and not reflected in the price, how long does it take for the price to reflect? That's a good question. I don't know, Crypto Joel. To be honest, I really don't know. Rate cut, they probably wouldn't come out till rate cuts till June, which is a 33% chance that happens. If you like tariffs, they love inflation and the trade war, boom the market. Time for Trump to wake up. I clean up on my only feet. Yeah, markets are kind of, like I said, markets are kind of flat. I mean, I was expecting a little bit more volatility, to be honest with you, but I mean, they're still kind of flat. I guess that's actually a good sign. I mean, to be flat versus a major sell off, I gotta hand it. Maybe the markets reacted exactly how they should be reacting. You know what I mean? So yeah, kind of interesting when you think about it. Austin, have you ever looked into no, I don't know if I've looked into that soul, to be honest with you. No. I think we're in a dark days going forward. Do you think so? I don't think so. Yeah, June's a whole month away. Yeah, well, that's the next meeting. Anyone bashing Trump, what office do you hold? I think we are about to pump, bro. Bitcoin's coming back into the green on the hourly. So I mean, things are actually not that bad. I mean, they didn't react as much as I thought they would. I'm gonna be completely honest with you guys. I was expecting there to be a little bit more reaction to the market. Look at Google price. Yeah, let's take a look at Google price. Has it bounced back? It's probably bouncing back now. Yeah, that's down pretty hot right now. Gosh dang. Yeah, Google's looking rough. Hey, no different than Tesla, dude. Tesla had a big major sell off too. I mean, and Tesla's bounced back nicely. So, dude, I wouldn't even doubt people that are doubting Google right now. It's crazy to me. That's crazy to me that you'd be doubting Google. Even XRP has been barely affected by this. Bitcoin back up to 96433. So, yeah, dude, we're actually back in the green on the hour right now. So this thing came down, had a sell off, came back down to 95,923, and it's already back up into the green right now, back at 96,446. So let's see where markets. Yeah, the S&P 500 is almost back to the green. The Dow's back up 100 points almost. So, dude, I don't know. Markets are reacting positively to the holding of the rates. So far, so good. We'll have to sort of see. Right now, it could be a fake pump, right? We have to see when Jerome Powell speaks, the markets tend to take a dump. So look at Google's the markets are going to stop caring about FOMC. They probably will, Marty. It was a fake sell-off. We'll see when Jerome Powell starts speaking. When Jerome Powell starts speaking, that's when the markets really react, and that should be here in about 9 minutes. What do you think about the strong correlation between Bitcoin and the global? Yeah, I mean, it's definitely following it. I mean, I still think Bitcoin's super strong regardless. Yeah, I think it's probably fallen into a T. It was a fake sell-off. It's all been priced in already. It probably has, dude. I mean, this volatility of this market's been wild, so it's kind of is priced in. There's a big 618 wall acting as support right now. I think the rate hold was fully expected. It was 98% expected. So yeah, this was not like any breaking news. This was 98% of the market was, everyone believed, 98% of the people, there was a 98% probability that it was going to stay the same. That's a pretty big probability. It's a cover call ETF, and with monthly dividends, I moved some money into it for some derivatives income and think it's worth checking out. Okay. That's good though, dude. Yeah, get those derivatives, man. So yeah, crypto's come back around. Bitcoin, yeah, Bitcoin's still back in the green on the hour chart. The daily's in the red, but the hourly is coming back, at least for the hour. So that's positive to see. That's positive to see. Yeah, Jerome Powell should be speaking here in about, hopefully he speaks here in about 7 minutes. Fed hold rate steady. I love BTC. I keep buying it every day. Dude, that's the way to do it, man. If you can keep buying it, keep buying it. What's up, Deb? Yeah, XRP is looking good. I like XRP, dude. XRP is still looking good. A lot of these are looking good. XRP is looking good. Hour chart, XRP's up. H bar, hour chart. Yeah, XRP is looking, or H bar is looking pretty good at the bottom of the RSI down here. Bottom of the RSI. So yeah, those are looking pretty good. I just renamed my punching bag to Jerome. He's not doing too bad. I mean, like I said, the markets are kind of working their way back. They're kind of working their way back. I mean, the S&P 500 is at only 12 points down now. The Dow's back up to 940 points. Nasdaq's trying to recover, but I mean, with the sell off of Apple, that's gonna be tough. Silver Shy, what's up, man? Zero chance Powell cuts rates as he has to play the villain in this movie. Yeah, he didn't cut rates. He kept them all the same, dude. Alt's making a head and shoulder. I just remember Ondo could be 3.5 if we go back to second. Yeah, I think Ondo's gonna do well, or at least Ondo should do well. Mm-hmm. Yeah, that's looking nice. I think it's looking pretty good. Let's see if anyone else is saying anything on here. So that's positive to sort of see right here. You see right here, it says unemployment rate has stabilized at low level in recent months, and the labor market conditions remain solid. So that's a positive statement from the Feds, right? I mean, that's something you want to hear. So I could see why the markets are not responding like horribly to it. So yeah. Let's see here. And it probably doesn't help. Yeah, it probably doesn't help that Pakistan and India are going to war. Like craziness, dude. That's some craziness. I just hey Austin, what do you think about gold? I mean gold, dude. I mean, there's a lot of people in here that are into gold. I think gold's looking pretty good. I mean, it's at an all-time high. People are probably gonna start buying. It's probably gonna peak. If the market wants to reach the peak by the end of the year, it better get to it as soon as possible. Lambo awaits. Hell yeah. Another 7-year hike to all-time high for XRP. 7 years. It'll take, you think it's going to take 7 years to get to there? I don't know. 7 years is quite a ways away. No, let's see here. Where is that at? There we go. Yeah, it's kind of gone. This year is just a big game. Kind of funny when you stand back and look at what we're doing in our existence. Let's be real. Mankind is pretty stupid. Pinocchio. These India Pakistan guards angry dancing, but dude, those are so funny. I don't know if those are real or not. I think those with the long timelines are underestimating what happens when digital scarcity really hits. Yeah, I'd agree. I mean, that's what's so important about Bitcoin being that there's only 21 million Bitcoins out there. Yeah, I'm gonna watch it, Curtis. I'm just waiting for him to go live. He should go live here in about 3 minutes. Usually around 11:30. Around 11 o'clock, the announcement gets made, and then 11:30, he'll come up and speak, and I'll play that when he speaks. I don't care if they are real. Aliens don't stop over because we be hustling for our money. It feels like we be hustling, dude, big time. No problem. I'm in UK. No idea what time there. Don't forget Satoshi's ledger. Yeah, it's true. That's already burned, right? Romeo, Pure Wallet already accepts HBAR on their new update. The new update that comes out, it's going to have HBAR on there. Yeah, they've already worked on it and put it in there. So it's already going to have Solana, HBAR, XRP, BNB, Ethereum. I think there's a couple other I'm probably missing. Sui's another one that's going to be in there. So yeah, this next update's going to be pretty big for the Pure Wallet. So kind of excited about that for sure. How low do you think it could go? Like I said, I think that, like Deb, I'm still sitting around that, the 215 to 210, and then anywhere in the $2 range. When will Pure Wallet release tokens? I'm thinking probably after Bitcoin 2025. Just wanted to confirm I'm not in the group that disappeared till bull run. Oh, you're good, Curtis. I appreciate you, bro. You're awesome. Yeah, I'm assuming the team's probably going to launch after Bitcoin 25, if I had to guess. I think it's just a bull liquidity grab after the speech. It'll go to hell. You think it's going to go down? Okay. I mean, it's 96.5. It's starting to climb right now in terms of price for Bitcoin. The idea of BTC is if it was crashed 10,000 times harder than it's ever pumped one day. You think it's the Napster of crypto? Gosh. The Napster of crypto would be pretty crazy. It's not going to go above $3 anytime. You talking about XRP? Yeah, green eggs and lamb. It very well could, dude. It very well could. It very well could, dude. Let's see. We have about 1 minute before Powell speaks. Let's get it going over here. Let's go present. There we go. They should be speaking here any minute. I have it on mute, but I'll turn it up when he comes out. We'll bring it up here because he's going to speak in a moment. We'll be able to see the reaction to the markets as well. Maybe what I'll do is I'll make a little screen over here. Oh, I guess I can't do that. That's what I hate about freaking StreamYard, dude. I hate that StreamYard does it like this. So lame. So lame, dude. Here we go. All right, get ready, guys.
Leading indicators at a time of such great uncertainty.
Here we go.
May 7th, and the chairman has stepped up. Here's the chairman of the Federal Reserve.
My colleagues and I remain squarely focused on achieving our dual mandate goals of maximum employment and
EDP's 5G Living Lab is transforming a
freaking hate you
70-year-old
guys
dam
so much,
into a
dude.
digital innovation hub.
They did that on purpose, man.
Vodafone Business has deployed 5G infrastructure to transform the way we do things better, faster, more efficiently.
Dude, go thumbs these people down.
But has been running somewhat above our 2% longer run objective. In support of our goals, today the Federal Open Market Committee decided to leave our policy interest rate unchanged. The risks of higher unemployment and higher inflation appear to have risen, and we believe that the current stance of monetary policy leaves us well positioned to respond in a timely way to potential economic developments. I will have more to say about monetary policy after briefly reviewing economic developments. Pardon me.
Oh, pardon me.
Following growth of 2.5% last year, GDP was reported to have edged down in the first quarter, reflecting swings in net exports that were likely driven by businesses bringing in imports ahead of potential tariffs. This unusual swing complicated GDP measurement last quarter. Private domestic final purchases, or PDFP, which excludes net exports, inventory investment, and government spending, grew at a solid 3% rate in the first quarter, the same as last year's pace. Within PDFP, growth of consumer spending moderated, while investment in equipment and intangibles rebounded from weakness in the fourth quarter. Surveys of households and businesses, however, report a sharp decline in sentiment and elevated uncertainty about the economic outlook, largely reflecting trade policy concerns. It remains to be seen how these developments might affect future spending and investment. In the labor market, conditions have remained solid. Payroll job gains averaged 155,000 per month over the past 3 months. The unemployment rate at 4.2% remains low and has stayed in a narrow range for the past year. Wage growth has continued to moderate while still outpacing inflation. Overall, a wide set of indicators suggest that conditions in the labor market are broadly in balance and consistent with maximum employment. The labor market is not a source of significant inflationary pressures. Inflation has eased significantly from its highs in mid-2022.
That's not bad.
But remains somewhat elevated relative to our 2% longer run goal. Total PCE prices rose 2.3% over the 12 months ending in March. Excluding the volatile food and energy categories, core PCE prices rose 2.6%. Near-term measures of inflation expectations have moved up, as reflected in both market and survey-based measures. Survey respondents, including consumers, businesses, and professional forecasters, point to tariffs as the driving factor. Beyond the next year or so, however, most measures of longer-term expectations remain consistent with our 2% inflation goal. Our monetary policy actions are guided by our dual mandate to promote maximum employment and stable prices for the American people. At today's meeting, the committee decided to maintain the target range for the federal funds rate at 4.25% to 4.5% and to continue reducing the size of the balance sheet. The new administration is in the process of implementing substantial policy changes in 4 distinct areas: trade, immigration, fiscal policy, and regulation. The tariff increases announced so far have been significantly larger than anticipated. All of these policies are still evolving, however, and their effects on the economy remain highly uncertain. As economic conditions evolve, we'll continue to determine the appropriate stance of monetary policy based on the incoming data, the outlook, and the balance of risks. If the large increases in tariffs that have been announced are sustained, they're likely to generate a rise in inflation, a slowdown in economic growth, and an increase in unemployment. The effects on inflation could be short-lived, reflecting a one-time shift in the price level. It is also possible that the inflationary effects could instead be more persistent. Avoiding that outcome will depend on the size of the tariff effects, on how long it takes for them to pass through fully into prices, and ultimately on keeping longer-term inflation expectations well anchored. Our obligation is to keep longer-term inflation expectations well anchored and to prevent a one-time increase in the price level from becoming an ongoing inflation problem. As we act to meet that obligation, we'll balance our maximum employment and price stability mandates, keeping in mind that without price stability, we cannot achieve the long periods of strong labor market conditions that benefit all Americans. We may find ourselves in the challenging scenario in which our dual mandate goals are in tension. If that were to occur, we would consider how far the economy is from each goal and the potentially different time horizons over which those respective gaps would be anticipated to close. For the time being, we're well positioned to wait for greater clarity before considering any adjustments to our policy stance. At this meeting, the committee continued its discussions as part of our 5-year review of our monetary policy framework. We focused on inflation dynamics and the implications for our monetary policy strategy. Our review includes outreach and public events involving a wide range of parties, including Fed Listens events around the country and a research conference next week. Throughout this process, we're open to new ideas and critical feedback, and we will take on board lessons of the last 5 years in determining our findings. We intend to wrap up the review by late summer. The Fed has been assigned 2 goals for monetary policy: maximum employment and stable prices. We remain committed to supporting maximum employment, bringing inflation sustainably to our 2% goal, and keeping longer-term inflation expectations well anchored. Our success in delivering on these goals matters to all Americans. We understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission. we at the Fed will do everything we can to achieve our maximum employment and price stability goals. Thank you. I look forward to your questions.
Steve Leisman, CNBC. Thank you, Mr. Chairman, for taking my question.
Bitcoin's looking good,
A
though.
lot has happened since the last meeting. There's been tariffs put on, tariffs taken off, and meanwhile, there's a bill advancing in Congress. And I just wonder if I could press you on the last part of your statement. Are you any closer now to deciding which side of the mandate is going to need urgent care first?
Well, so as we noted in our statement, post-meeting statement, we've judged that the risks to higher employment and higher inflation have both risen. And this, by the way, of course, is compared to March. So that's what we can say. I don't think we can say, which way this will shake out. I think there's a great deal of uncertainty about, for example, where tariff policies are going to settle out. And also when they do settle out, what will be the implications for the economy, for growth, and for employment. I think it's too early to know that. So, I mean, ultimately, we think our policy rate is in a good place to stay as we await further clarity on tariffs and ultimately their implications for the economy.
Hearing you describe what you're looking for in terms of being able to make a decision, it sounded like that's a long-term process before you sound like you're going to be comfortable, or the committee would be comfortable to act on what the data is telling you.
I don't think we know. I think if you look at where we are today, we have an economy that, if you look through, the sort of distortions in Q1 GDP, you've still got an economy that looks like it's growing at a solid pace. The labor market appears to be
positive.
Solid.
That's good.
Inflation is running just a bit above 2%. So it's an economy that's been resilient and is in good shape. And our policy is sort of modestly or moderately restrictive. It's 100 basis points less restrictive than it was last fall. And so we think that leaves us in a good place to wait and see. We don't think we need to be in a hurry. We think we can be patient. We're going to be watching the data. The data may move quickly or slowly, but we do think we're in a good position where we are to let things evolve and become clearer in terms of what should be the monetary policy response.
Hey, that's a good statement. At least he's made it clear that the economy is not in a bad shape. So, I mean, anyone that's out here trying to make fear in the market, screw them, dude.
Around 2021 shots. But there are some who argue that the current situation has notable differences. Energy costs are down. Housing imbalances look nothing like they did 4 years ago. Labor demand appears to be gradually cooling, with wage growth running below 4%. What do you see right now that could nourish higher inflation beyond a rise in goods prices this year?
I think the underlying inflation picture is good. It's what you see, which is inflation now running a bit above 2%. And we've had basically decent readings in housing services and non-housing services, which is a big part of it. So that part, I think, is moving along well. But there's just so much that we don't know. I think, and we're in a good position to wait and see is the thing. We don't have to be in a hurry. The economy has been resilient and is doing fairly well. Our policy is well positioned. The costs of waiting to see further are fairly low, we think. So that's what we're doing. And we're
one of the most positive things I've heard come out of Jerome Powell.
The administration is entering into negotiations with many countries over tariffs. We'll know more with each week and month that goes by where tariffs are going to land, and we'll know what the effects will be when we start to see those things. So we think we'll be learning. I can't tell you how long it will take, but for now, it does seem like it's a fairly clear decision for us to wait and see and watch.
So when you say that you don't need to be in a hurry, does that mean that could the outlook change in such a way that a change in your stance could be warranted as soon as your next meeting?
As I said, we are comfortable with our policy stance. We think we're in the right place to wait and see how things evolve. We don't feel like we need to be in a hurry. We feel like it's appropriate to be patient. And when things develop, of course, we have a record of we can move quickly when that's appropriate. But we think right now the appropriate thing to do is to wait and see how things evolve. There's so much uncertainty. If you talk to businesses or market participants or forecasters, everyone is just waiting to see how developments play out And then we'll be able to make a better assessment of what the appropriate path for monetary policy is. So we're not in that place. And, as that develops, and I can't really give you a time frame on that.
Janelle Marte with Bloomberg. So many economists have been pricing in higher odds of a recession, and several are noting that it is more difficult for the Fed to cut rates preemptively given the higher risks for higher inflation. So given the outlook, do you still see a path for a soft landing, and what does that look like?
Well, let me say, so let's look back and see where we are. So to go through 2024 up to the day, we've had
right there.
Unemployment in the low 4s for more than a year. We've had inflation coming down now in the mid to low 2s. We've had an economy growing at 2.5%. So that is the economy as we see it now. What looks likely, given the scope and scale of the tariffs, is that we will see certainly the risks to higher inflation, higher unemployment have increased. And if that's what we do see, if the tariffs are ultimately put in place at those levels, which we don't know, then we won't see further progress toward our goals. But we might see a delay in that. I think in our thinking, we never do anything but keep achieving those goals. But we would, at least for the next, let's say, year, we would not be making progress toward those goals. Again, if that's the way the tariffs shake out. The thing is, we don't know that. There's so much uncertainty about the scale, scope, timing, and persistence of the tariffs. So that's that. In terms of preemption, I think you can look back at the 2019 cuts as preemptive. I wouldn't say that what we did last fall was at all preemptive. If anything, it was a little late. But 2019, we did cut 3 times. But the situation was you had a weakening economy and you had inflation at 1.6%. So that's a situation where you can move preemptively. Now we have inflation running above target. It has been above target for 4 years. It's not so far above target now. And we have an expectation, conditional on what happens, that we'll see upward pressure on inflation. If you look at where forecasters are, they're all forecasting an increase in inflation. So it makes it, and then we've also got forecasts of weakening in the economy, and some have recession forecasts. We don't publish a forecast about that. We don't publish a forecast that assesses how likely a recession is. But in any case, it's not a situation where we can be preemptive because we actually don't know what the right response to the data will be until we see more data.
Did not answer the question, dude. So are we soft landing or not?
Colby Smith with the New York Times. How much weakness does the committee need to see, though, in the labor market and the economy more broadly to?
Big A, where you at, Big A? Your girl's on TV.
Is it about a certain increase in the unemployment rate over a period of time, or perhaps a certain number of negative monthly job reports? I mean, how are you making that assessment?
So first of all, we don't see that yet, right? We have 4.2% unemployment, good participation, wages behaving very well. Participation, I mentioned at a good level. So, with the labor market, we would look at the totality of the data. We'd look at the level of the unemployment rate. We'd look at the speed with which it's changing. We would look at the whole huge array of labor market data to get a sense of whether conditions are really deteriorating or not. And at the same time, we'd be looking at the other side of the mandate. We could be in a position of having to balance those two things, which is, of course, a difficult balancing judgment that we'd have to make.
On that point about balancing, I mean, you've mentioned that the committee would consider how far the economy is from each goal and the time it would take to kind of get back to that point. But what does that mean in practice? I mean, how much of that assessment will be rooted in a forecast versus data dependence?
It would be a combination of the two. I mean, let's just say this would be a complicated and challenging judgment that we would have to make. We're not in this situation, but the situation is if the two goals are in tension. So let's say that unemployment is moving up in an uncomfortable way, and so is inflation. That's not the situation we're in. hypothetically, but we would look at how far they are from the goals, how far they're expected to be from the goals, what's the expected time to get back to their goals. We look at all those things and make a difficult judgment, and that's in our framework. It's always been in our thinking. We haven't faced that question in a very long time, so again, difficult judgment to make, and not one that we face today. And we may never face it, but we have to be keeping it in our thinking now.
Edward.
Thank you. Edward Lawrence with Fox Business. So we had the CPI report that came out that showed month over month the first decrease in inflation in about 3 years. The jobs report, you said, solid, that we saw. At the same time, we have those new tariffs that we're living under. So given this, should the Federal Reserve be cutting rates at all this year?
It's going to depend. I think you have to just take a step back and realize this is why we are where we are. We're going to need to see how this evolves. There are cases in which it would be appropriate for us to cut rates this year. There are cases in which it wouldn't.
Tell me those
We
cases
just
so I
don't
can
know
plan.
until we know more about how this is going to settle out and what the economic implications are for employment, for inflation. I couldn't confidently say that I know what the appropriate path will be.
So following on that, so then how does President Trump calling on you personally, as well as the Federal Reserve, to make rate cuts affect your decision today and affect your job difficulty?
Doesn't affect our doing our job at all. So we're always going to do the same thing, which is we're going to use our tools to foster maximum employment and price stability for the benefit of the American people. We're always going to consider only the economic data, the outlook, the balance of risks, and that's it. That's all we're going to consider. So it really doesn't affect either our job or the way we do it.
Howard. Hi, Howard Schneider with Reuters, and thanks for the time. I'm wondering, given the complexity about the first quarter GDP and what lies ahead, I'm just wondering what your intuition tells you about the underlying direction of the economy right now. Many of your colleagues have said they feel growth is slowing. If so, do you have any sense of by how much, to what degree the slowdown may be? What does your gut tell you about how things are evolving out there?
My gut tells me that uncertainty about the path of the economy is extremely elevated, and that the downside risks have increased. The risk is, as we pointed out in our statement, the risks of higher unemployment and higher inflation have risen, but they haven't materialized yet. They're not in the data yet. So that tells me more than by intuition, because I think it's obvious actually that the right thing for us to do is we're in a good place. Our policy's in a very good place, and the right thing to do is await further clarity. And there's usually things clarify and the appropriate direction becomes clear. That's what usually happens. Right now, it's very hard to say what that would be. In the meantime, the economy is doing fine. Our policy isn't, it's not highly restrictive. It's somewhat restrictive. It's 100 basis points less restrictive than it was in, last summer. So we think it's in a good place, and we think the appropriate thing is for us to wait and see, and get more clarity about the direction of the economy.
Well, let me press you on this idea of the economy being fine right now, because reading the Beige Book very closely the last time around, there was a lot of negative stuff, negative sentiment that was in there. And I know that everybody's looking at soft data right now. You mentioned it yourself that the sentiment's sour. But the Beige Book was talking about, the beginnings of layoffs in some industries, prices rising in some places, and an awful lot of investment decisions being pushed to the sideline. Doesn't that point to a slowdown?
It may well. It just hasn't shown up yet. And we all look at all these sentiment and read many individual comments just to get a better feel. And businesses and households very broadly are concerned and postponing economic decisions of various kinds. And yes, if that continues and nothing happens to sort of alleviate those concerns, then you would expect that to begin to show up in economic data. It wouldn't maybe show up overnight, but it would show up over weeks and months. And that may be what happens, but it hadn't happened yet. And also there are things that can happen that will that will change that narrative. I mean, they haven't happened, but it's possible to imagine things that, but in the meantime, yes, we're watching it extremely carefully like everyone is, but don't see really much evidence of it in the actual economic data yet. And by the way, consumers keep spending, credit card spending. It's it's still a healthy economy, albeit one that is shrouded in some very downbeat sentiment on the part of people and businesses.
Michael McKee from Bloomberg Radio and Television. The Fed's been criticized recently by a former governor for what he calls mission creep. You take on more problems, use more tools, and then end up building tools to deal with the fallout of those tools, which then makes it a given that you will act more aggressively in the future. Is that a fair critique, and is that something you would be looking at in your framework review?
Sorry, say that critique again.
That the Fed has been involved in mission creep, gets involved in using too many new tools to deal with problems and to go too far. Is that something that the critique was based around the fact that you did QE and QE and QE and
quantitative easing
went beyond the narrow confines of your mandate?
So, well, I mean, there are a couple. That's not really beyond the confines of our mandate. I would say this: we did things. Essentially, we're on an emergency footing for a couple of years in the pandemic.
Yeah,
and it's very fair and very welcome for people to look back over what we did and say, hey, you could have done this better and different. And one thing we hear a lot is we could have explained QE a little better. We did think we were explaining it in real time. I completely accept the thought that we could have explained it better. There's a lot of thinking that we went on too long with QE. I can tell you that the reason we did was we were concerned that we didn't want a sharp tightening in financial conditions at a time when we thought the economy was still vulnerable. And so we did hold on for a long time to QE, and we of course tapered and everything. And then we immediately went into QT, and we're down a couple of trillion. But I get we certainly with the benefit of hindsight could have tapered earlier or faster. That's absolutely right. But this is all very welcome. We knew doing this in real time that we weren't going to get it perfect, and those kind of after action kind of looks are essential. And we're doing the same thing in our review. So on some issues.
The other part of that critique is that you've taken on topics that are outside of the mandate, such as climate change and trying to ensure that certain groups are benefited by your economic policies in terms of employment, et cetera.
So, okay, on climate, you've heard me say over and over again that we will not be climate policymakers, and that our role on climate is a very, very narrow one. And I think that's what we've done. We've done really very little on climate. You can say that that little bit that we've done was too much, but I wouldn't want to give any impression that we've taken climate and it's something that we're spending a lot of time and energy on. We're not. We have very, very narrow things. We did one guidance for the banks, and then we did a one-time stress analysis, climate stress analysis, and that's it. And we dropped out of the network for greening the financial system. So we didn't do much on
Bitcoin's
climate,
trying to come back
I
to leave the hour in the green.
Publicly,
it's right there. It's in the green right now.
It's a real danger for us to try to take on a mandate like that, which is very narrow application to our work. And the risk is if you go for things that are really not on your mandate, then why are you independent? And I think that's a very fair question. I do think we've done a whole lot less on climate than some people seem to think we did. Anyway, that's what I think.
Should you have taken on the question of bringing unemployment rates down for specific categories?
We didn't do that. What we said was that we never targeted any unemployment rate for individual racial or demographic groups. What we said was
I'm with you, Josh.
Maximum employment was a broad and inclusive goal.
I think made up numbers.
What we meant by that was we're going to consider the totality of the country
211
as we look at our maximum employment goal. Of course, we were never going to target any individual group with that. But I think
rising 96.428. It's in the green.
But that's
in the
not
green
all
for the hour. So it's trying to close the hour in the green.
So that's just not a correct reading of our. But I can see how maybe people found that confusing, and we have to take that into consideration.
Yeah, Bitcoin's climbing fast right now in the last hour. Gosh dang, 96.5 now.
Hi, Chair Powell. Thanks for taking our questions today. I'm Jolene Kent with CBS News. You've said wait and see, and the economy is doing fine today, but the impact of tariffs are already showing up at the ports. Businesses, big and small, are telling us that they feel it, and most importantly, consumers say they feel it, that the challenges are here, and there's no waiting and seeing. For Main Street, what is the breaking point? What would have to happen to prompt a rate cut specifically?
Well, so we really don't see in the data yet big economic effects. We see sentiment, there are concerns that higher prices may be coming or things like that. So they're worried now about inflation. They're worried about the a shock from the tariffs, but they really haven't. That shock hasn't hit yet. Okay, so we're going to be looking at the not just the sentiment data, but also the real economic data as we assess what it is we should do. And remember, there'll be two effects. One of them would be weakening.
Nasdaq's almost back into the green. Nasdaq's at 14 points down. Dow's up 200.
And the other would be potentially higher inflation.
S&P is back to almost 20 points up. So the market's looking decent, dude.
The scale and the persistence of those effects are
not looking
very,
horrible.
very uncertain. So it's not at all clear
What's up, buddy? What's up, Mark
Caffeine? For monetary policy is at this time, and and by the way, our policy is in a good place, so we think we can wait and move when it is clear what the right thing to do is. Really not at all clear what it is we should do. So people are feeling stress and concern, but unemployment hasn't gone up. Job creation is fine. Wages are in good shape. People are not getting laid off at high levels. Initial claims for unemployment are not increasing, in any kind of impressive way. So the economy itself is still, in solid shape.
Just a quick follow-up. President Trump now says he does not plan to remove you as chair. When you heard that, what did you think?
I don't have anything more for you on that. I've pretty much covered that issue.
That's funny.
Hi, thank you. Chris Rugaber, Associated Press. Well, I just wanted to follow up. Earlier, it sounded like you said it was unclear how the Fed, what kind of interest rate decisions you will make later this year. So does that, in March, there was guidance that two cuts might happen, two cuts were penciled in for this year. Is that now, that guidance from the last press conference, has that been overtaken by events at this point?
Yeah, it's coming up.
We don't do a
96
summary of economic projections at every meeting, as you know. We do it every other meeting. And
damn,
so this
ended at 96.6. Bitcoin's bouncing pretty good, actually.
We don't also kind of poll people, so I really wouldn't want to try to make a specific projection for where we are relative to that. We will, in 6 weeks, we have the June meeting, and you'll have another SEP. I'm not going to hazard a guess here today as to what it would be. Again, what I would say is that we think our policy rate is in a good place. We think it leaves us well positioned to respond in a timely way to potential developments. That's where we are. And that, depending on the way things play out, that could include rate cuts. It could include us holding where we are. We just are going to need to see how things play out before we make those decisions.
Great. And just to follow up on that, I mean, when you address the issue of how the Fed would handle both rising unemployment and rising inflation, how are you thinking about the fact that addressing one could exacerbate the other? So a rate cut to reduce unemployment could worsen inflation and vice versa. How do you handle those challenges?
You just captured this is the issue with the two goals being in tension. It's a very challenging question. Now, there can be a case in which one goal is very far, one variable is very, very far from its goal, much farther than the other. And if so, you concentrate on that one. And frankly, that was the case. Well, it wasn't a case where they were really in tension, but if you go back to 2022, it was very clear that we needed to focus on inflation. The labor market was also super tight, so it wasn't really a trade-off. If I think what our framework document says, it says we'll look at how far each variable is from its goal, and also we'll factor in the time it would take to get there. So, that's going to be potentially a very difficult judgment. But the data could break in a way that it's not. I just don't think we know that. The data could easily favor one or the other. And right now,
broken
there's
record.
no way to.
Let's
need to
actually.
make a choice.
We've already heard it. I don't think there's anything else that really needs to be said. I'm gonna let's actually take a look at. Let's take a look at Bitcoin, where it's at right now. You can see the Bitcoin ended the week. Or let me share my screen here real quick. Bitcoin ended the hour in the green right there, but now it's coming down slightly after the hour, back down to 96,480. The stock market's actually looking pretty decent, dude. In all reality, I mean, the Dow's up 303 points, the S&P 500's flat at 12, and the Nasdaq's pretty flat at 35 points. I mean, it's not really that bad. The VIX is down about 0.63, which really is nothing to really say. The reason why the Nasdaq down is still because of Google, but for the most part, I mean, in all reality, then nothing really happened to the markets like we thought. I was expecting there to be a bigger swing. Maybe there will be down. Maybe in the next couple hours we'll see a different tune. But I mean, honestly, I was expecting something worse. I think, in my own thoughts. Maybe I don't know why I felt that way, but has he finished? I got distracted watching my freshly painted wall dry. Yeah, I know, dude. It can get a little cumbersome listening to him, dude. I'm like, oh my god. He's back and forth. It says the same thing over and over and over again. Jerome didn't want to credit swap during the COVID pandemic. We all expected worse. Shit, 0.25 would have been good to keep the peace. Yeah, a 25 basis point would have been nice. That beard and hair, the Peaky Blinders suit. So monotone. Yeah, it's pretty boring, dude. I was yawning, dude. It gets pretty bad. We're becoming numb to everything. That's true. I'll give you that. Powell's that type of voice. Yeah, it's pretty bad, dude. Pretty monotone. It's amazing how much power the unelected feds hold. He holds the power to boom or crash the markets every month, it seems. That's true, so I'll give you that. Yeah, I'll give you that. Pretty kind of boring. I don't know what I was expecting today. I was hoping it's kind of I said boom or bust on the thumbnail. And I don't think it was neither. I think it was just kind of flat. I know. I'm with you, Ghost. Powell's voice sounds like I just can't believe he said lived. It's always goes down after the news looking good. Yeah, it usually goes down a lot worse than this. It's actually not too bad. Curtis, I don't know. I heard he's announcing something, but nothing's really been out. Nothing's been said. So I'm kind of like, I honestly don't know. Yeah, it's pretty I don't know how the day is going to turn out, to be honest with you guys. People are trying to guess what Trump's big announcement is. That's so funny, dude. That's true. You do sort of hang on to that. He's gonna announce that Powell's fired. Gosh, what a nothing burger day. The markets are coming down now. They're starting to come down slightly now. We're starting to see the effects. We'll have to continue to monitor the rest of the day. I mean, it's not going to sway me from anything in the market. I mean, I think we're all pretty sold on where the markets are at. Not really sweating anything. The Bitcoin down to 96.3, XRP down to 211. You see H bars down to 17.4. So yeah, it's coming down slightly, but I mean, in all reality, overall, the markets are still not looking too bad. I don't think there was any news given. Trump announcement will be awesome. Austin, what's up, man? Pleasure. You good to see you, buddy. Thursday and Monday. That's a long time. China's rioting. The dinner's been canceled. But all right, guys, I'm gonna hop off. I gotta go pick the kids up from school. I got to go do that. Like I said, that's kind of a nothing burger. I was expecting something different, but if the markets stay the way they are right now, I'll feel very happy going into tonight and into tomorrow. So maybe this weekend will also help. We'll have more clarity on the tariff discussion with China, which would be really good for the markets as well. So we'll see how that goes. And yeah, the big announcement will be the Guantanamo Bay opening. You mean the Alcatraz opening? But yeah, you guys take care too. You too, Tim. Everyone else, yeah, appreciate you. Z Goals, Soul, appreciate you all being here. Thanks for kicking it, hanging out. It was kind of a boring stream, to be honest with you. It was I was expecting something better. I don't know what it was. I just had this feeling that maybe something better was coming. Yeah, you too, Deb. Have a great one too. I love you too, Billian Wright. Big watch, dude. Peace, Pinocchio. Yeah, thank you guys. Craig, F. Joe, peace out. Girl Scout. Peace put. I don't know what you're talking about, F. Joe. Glad you went live. Yeah, I figured I'd jump on live real quick. So again, appreciate you guys. Love you guys a ton. Make sure you guys like the stream. If you haven't subscribed, hit the subscribe button. And with all that said, we're out. Peace out, everyone.